What if I told you that two AI stocks, one fighting for survival, the other accelerating toward dominance, are both setting up for potential breakout moments in 2025? While the market obsesses over headlines and hype, a far more strategic story is unfolding behind the scenes of BigBear.ai and Palantir, and it's one that could shift your portfolio in a big way. This isn't just speculation. We're looking at one company under fire, navigating lawsuits and financial turbulence, while the other is rapidly stacking billion-dollar government deals. The contrast is sharp, but the opportunity is real. If you're here to find where the big wins could come from in the AI sector, you're in the right place. Quick reminder, if you're serious about catching explosive market opportunities before the rest of the crowd, make sure to hit that subscribe button. It takes a second and ensures you're always in the loop when it matters most. Let's begin with BigBear.ai. This stock has been through a storm, and that's putting it lightly. As of May 2025, it's at the center of multiple class action lawsuits. The heart of the issue, allegations around how the company accounted for its 2026 convertible notes, leading to misstated financial results and triggering restated earnings. These legal overhangs aren't just headlines. They've eroded investor trust, pushed volatility higher, and exposed critical weaknesses in internal controls. And yet, despite the courtroom chaos, BigBear reported a 5% increase in first quarter 2025 revenue, hitting $34.8 million. That might sound solid, but the full picture is less optimistic. A net loss of $62 million and adjusted EBITDA at negative $7 million reflect mounting pressure from delayed government payments and rising costs. On the surface, this might seem like a red flag, but dig a little deeper and a more complex narrative starts to form. The company still has a $385 million backlog. That's not trivial, and it's actively pursuing major defense-related AI contracts, including a newly announced partnership with Hardy Dynamics focused on drone swarm orchestration for the US Army. The legal issues are real, but so is the innovation. And that's where smart investors start paying closer attention. Not to the noise, but to the potential catalyst hiding behind it. Now let's shift to Palantir. Unlike BigBear, this company has momentum, and it's not subtle. Just last month, Palantir locked in its first ever $1 billion contract by expanding its partnership with the US Army for the Maven Smart system. This is a big deal, not just because of the money, but because it cements Palantir's role at the core of next-generation military operations. That's not all. Analysts are buzzing about its involvement in the next-generation command and control program, which could further entrench the company in the future of defense AI systems. In response, Palantir raised its 2025 revenue guidance to $3.9 billion, signaling a growth rate of roughly 35%. The narrative is strong, the pipeline is growing, and demand for its AI-driven solutions keeps accelerating. But here's where things get complicated. Palantir is facing intense scrutiny over its valuation. The stock trades at a price-to-earnings ratio north of 650. That kind of multiple raises eyebrows even in tech-heavy circles. And when CEO Alex Karp sold over $50 million in shares last week, it raised the question, is the hype already priced in? This is where retail investors face a challenge. On one hand, you have a company that's executing like a machine and scaling faster than ever. On the other, you've got valuation concerns that make traditional investors cautious. So, the big question becomes, is Palantir's premium worth paying for the kind of strategic positioning it now holds? Here's what matters. You've got two AI players moving on the same timeline. One is rebuilding trust after a crisis, the other is trying to justify its soaring price tag. And the market is watching both closely. If you're watching this, it means you're not just here for the hype. You want to understand how short-term chaos and long-term vision collide and how that could lead to outsized returns. Just a quick shout out to our sponsor, Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward: 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. For BigBear.ai, the turning point could come from two places: legal resolution or a major contract win. If either of those hits in third or fourth quarter, it could trigger a wave of buying pressure as traders rush to price in upside. Until then, it's a patience game. For Palantir, the focus shifts to execution. If the company meets or exceeds its revenue targets, expands further into defense, and keeps costs under control, then the current valuation starts to look more justified. But any stumble, any missed milestone or disappointing update could open the door for a sharp correction. And that's what makes 2025 so important. Both companies are running on tight wires. BigBear is one catalyst away from a breakout or a breakdown. Palantir is one miss away from a valuation reckoning or one surprise away from another vertical run. So, will BigBear.ai and Palantir make you rich in 2025? That depends on which kind of investor you are. BigBear offers high risk, high reward upside for those willing to wade through uncertainty. Palantir offers strong fundamentals wrapped in a valuation bubble that demands precise execution. This isn't about picking a favorite, it's about understanding which risk profile matches your strategy. Both stocks could generate massive returns, but only if the right conditions line up. The smart money isn't reacting to headlines, it's watching the setup and waiting for the moment. Let me know in the comments which side you're leaning toward, BigBear's comeback or Palantir's climb. And if you found this breakdown valuable, make sure to subscribe so you never miss insights that can move your portfolio.